Hi, welcome to this video lecturing. In this video, we will be seeing about what are the entries that we will be entering in profit and loss account and balance sheet. Before moving on to this trading account, balance sheet and profit and loss account, we will see what is final accounts. Final accounts is the financial statement which is prepared by the business in order to know what is the profit or loss incurred by the business. For calculating this final accounts, we are supposed to prepare three accounts. One is trading, profit and loss account, and balance sheet. Trading account, all the direct expenses, we will be recording it and we will be finding out what is the gross profit or gross loss which has been incurred by the business. If the balance is coming under the debit side, it is a gross profit. And if the balance is coming under credit side, it is of a gross loss. We will be moving on to profit and loss account. As like of trading account, all the direct expenses will be recorded. And here in profit and loss account, all the indirect expenses will be recorded. And the gross profit or gross loss which has been prepared will be transferred to profit and loss account. And if it is a gross profit, automatically while transferring it from the trading account, it will be appearing in the credit side. If it is a gross loss, it will be transferred from credit side of trading account and to debit side of profit and loss account as to gross loss. And all the indirect expenses like salaries, rent, commission, all the expenses will be recorded in the debit side, and opposite, the income will be recorded in the credit side. Reminding you, all the indirect expenses and indirect income only will be recorded in the profit and loss account. The examples for indirect expenses are salaries, rent, commission, discount, advertisement expenses, interest, insurance premium. All these will be coming under the category of indirect expenses. So it will be recorded in the profit and loss account. And the indirect income may be dividend received, interest received, discount received, commission received, rent received. All the receivables which are all of indirect related to office will be recorded in the credit side. Similarly, the depreciations will be recorded as an expenses in the debit side of your profit and loss account. So once the entry has been given as a trial balance account, you are supposed to classify whether it will come under trading account, profit and loss account, or balance sheet. If it is of a direct expenses, automatically it will be going on to trading account, and the indirect expenses like depreciation, rent, salaries, all those things will come under profit and loss account. And the assets and liabilities will be coming under the balance sheet. Once all the expenses recorded in debit side and all the receivables recorded in the credit side, we are supposed to balance the profit and loss account as we have done for the trading and the ledger accounts. We are supposed to have the rough total on both sides, and which side is minimum we have to identify. If the balance is coming under the debit side, we will be calculating and we will be taking it as the net profit. And if it is appearing in the credit side, that is the balance is appearing in the credit side, then it is assumed to be net loss. If whether net loss or the profit, it should be transferred to the capital account in the balance sheet. And with this, the trading and profit and loss account, we have finished. And remind you, in this video, we have seen what are the entries that we will be recording in the profit and loss account. All the indirect expenses and the indirect income will be recorded in the profit and loss account in order to arrive the net profit or the net loss that has been incurred by the business. Last account that should be prepared under the final accounts is balance sheet. Under this balance sheet, we will be recording the assets and liabilities. This balance sheet will show the financial position of the firm. Assets and balance sheets will be recorded in this format. The specimen for balance sheet has been shown in the PPT. That is liabilities and assets. Assets has been classified under two heads as current assets and fixed assets. Current assets is the cash which will be available with the firm, or the thing that can be converted into cash immediately comes under the current accounts. The examples for current accounts are cash in hand, cash at bank, sundry debtors, bills receivable, prepaid expenses, accrued income, and closing stock will be coming under the category of current assets. And under fixed assets, furnitures, land and building, plant and machinery, goodwill, patent, all these things we will be recording. And the investment is also considered to be the asset, either it may be in the government securities or in any other private sectors. And under liabilities, liabilities is the amount which the company has to pay to the outsiders, which may be bills receivable, to the sundry creditors, to whom we have to make payment for credit purchases or bank overdraft, outstanding expenses, all these things will come under the liability side. As like of the assets, the liabilities also classified under current liabilities and long-term liabilities. Under owner's equity is also considered to be under the liability side. As like of current assets, which should be collected quickly, that is current assets. As like of similarly, current liabilities is the amount that we have to make within 1 year. That comes under current liabilities. The examples for current liabilities are bills payables and creditors, bank overdraft, outstanding expenses, and the income received in advance will also be considered under liability side. And the long-term liabilities is the loan that we have borrowed from the bank or from any other person, and debentures will also be included in the long-term liabilities. And owner's capital is the amount that has been invested by the owners. And reserves and surplus will also be added in the liabilities as the owner's equity. And interest on capital will be added, and net profit also will be added along with the capital, and the drawings, if there is any, will be deducted, and income tax will also be deducted from the owner's capital. So this is the way in which you will be recording the assets and liabilities. Once the transaction has been classified under trading profit and loss account and balance sheet, we are supposed to enter in these format. And at last, the balance sheet of assets and liabilities, or the amount under the liabilities and assets, should get equal. That is called as balance sheet. And thank you.